I'm William Kumwembe with Business Time. It is a magazine program where we bring you major business and economic news stories making headlines in the country. And coming up in the program, we look at prospects towards import substitution in the country as the construction industry has made headways. And also in the program today, US speaks on possible future for Malawi's extended credit facility program with the IMF. Stay tuned. Hello and welcome. In our main story program today, Malawi has for years remained a predominantly importing and consuming nation amid strides towards import substitution. The construction sector is one where much of the material used is imported, but some local businesses have inspired efforts to enhance production of material needed for construction in a bid to cut costs Malawians incur when importing such products. We visited some in Lilongwe to appreciate strides made. This is Lilongwe, Malawi's capital city. Lilongwe has in recent past almost turned into a construction site. Public infrastructure like roads are taking shape. So are residential and business infrastructures. All these require material, most of which are imported, thereby draining the already volatile forex purse. But strides are being made towards import substitution for construction materials. At Kanengo in the city, for instance, this firm is producing wallpate, material used in building.
Yeah, so this is our production area. Yeah, it starts from the mixing, then the packaging. So here is where we pack our product.
Daniel Naula is one of the directors here.
We are already in construction business. We've been using a traditional type of lime party. The one that we use, we buy lime and cement and we mix to make lime party. But we saw there was a gap because this lime party had some problems, especially when it comes to mixing, and it was taking a bit of time. So as a contractor, we thought maybe we can come up with something, a product that will be a substitution for this one, but a better version of the lime party. It's economical because when you look at the prices for lime and cement to make lime party, the prices are higher. But this one is cheaper because most of our materials that are used, they are locally available in Malawi. And secondly, this one is, the quality is even better than lime because this one is weatherproof. You can even use it outside the house. Inside doesn't crack or peel out because of the kind of material that you are using. Just here at production, I mean, if you were to add the production level plus where we are getting the ground minerals, we can say we are employing more than 100 people, women and men all together. So yeah, we have already created more jobs for Malawians. So from the mine to up to the production level, we have already employed more than 100 people, men and women. Yeah.
What does the future hold? What is the outlook?
Okay, so if we are to grow, because right now we are using a smaller version of machine, if we are to have bigger machines and increase our capacity of production, it means we may even start exporting. Because we have already have customers from neighboring countries like Zambia and Mozambique who have already used this product, and they have given us good recommendations, which means the potential for exporting is big again. So if we are to reach that level, it means we will also start bringing forex into Malawi, and Malawi will benefit from it.
The miles from here, we get to Likuni. There, Bamboo Company is designing and producing furniture using bamboos. We caught up with Thokozani Matandalizwe, General Manager here.
From bamboo, we produce a lot of products. As you can see here, we have a table, we have a blind, a window blind, we have doors. Even where we are sitting is made of bamboo seats. We manufacture a lot of things from bamboo, even floor tiles, also are made from bamboo. You can manufacture anything from bamboo. Market response is very positive. We have a lot of orders. And mainly along the lakeshore, the lodges there at the lakeshore, they prefer local manufactured goods. It has a lot of impact because the bamboo is locally planted and it also is locally processed. So the only thing which we can use forex on this is only the chemicals which are used to treat the bamboo. I think the changes which it's going to bring is it will assist economically the local farmer, the ones who are planting bamboos. At least they'll have their lives changed because they'll be selling the bamboo to us. Then we'll have also local employment for people. It's an employment source for local Malawians. So now I wouldn't say it's 100% because it's just new, but we say we are going there maybe up to 45 to 50%. Yeah.
And what does the future hold? How is the prospects?
The prospects are very high. What we want is support from the local Malawians. And also, we are intending to be exporting these products.
The National Construction Industry Council is advocating import substitution. It is supporting the industry for growth.
So what we have started working on is through research, we wanted to check first whether as a country we have the potential to produce locally to feed the construction industry. What we have discovered is we have the potential as a country to produce locally most of the materials that we need. I'll give you an example of the ceramic materials. That is, when we talk of the tiles that we need as an industry, the wash basins that we use, even the soap holders that maybe we are getting outside the country, we have that potential. So we wanted to first of all ensure that there's that potential as a country. We just need to work on upscaling, put in place policies that will ensure that those that are manufacturing already upscale and produce more to meet the demands of the industry. There are a number of advantages of using locally produced materials. Number one, if we start using our locally produced materials, we are going to contribute a lot in terms of the economic development. We will create jobs within the country. If we are buying from outside the country, we are exporting our jobs. But there are lots of Malawians that are looking for jobs. If we start producing locally, we'll create jobs for our citizens within the country. We will not export jobs. And also, we positively contribute to sustainability in the construction industry. The moment we buy from outside the country, getting those materials to the country, it means these are transported through different modes of transportation, and that contributes to carbon emissions, which at the end of the day are contributing to climate change. So shifting from using what is locally made, not what is exported, it will contribute to sustainability. And also, if we are making our own construction materials, we are going to make something that best suits our weather, our climate, our culture. We'll make things that are tailored to our environment as well.
The ES has noted that low revenue collection, ballooning expenditures, and delay full implementation of integrated financial management information system (IFMIS) have put a risk for Malawi to stay on track with the IMF. U.S. Department of Deputy Assistant Secretary for Africa and the Middle East, Eric Meyer, told reporters in Lilongwe at the end of his 4-day visit to Malawi that he has expressed deep concern that the development will impact all Malawians, and particularly Malawi's most vulnerable citizens. Taonga Sabola with Meyer in this interview.
The United States is Malawi's largest bilateral partner, and we are deeply engaged in Malawi's success. We are also very invested in wanting Malawi to succeed. This includes stabilizing the economy and creating a stronger foundation for growth and jobs for the Malawian people. A key part of this effort over the last few years has been working with Malawi's partners. including the International Monetary Fund, the IMF, and the World Bank, to support the very difficult but much needed reforms that Malawi has been undertaking. You know, after taking the difficult steps to launch the extended credit facility at the IMF, the ECF program, with the IMF last year, Malawi now needs to undertake measures that will allow that support to continue. I came to Malawi this week to meet with senior government officials and to discuss our concerns about the trajectory of the country's current economy. I had the chance this week to meet with the Vice President, the Minister of Justice, the Minister of Local Government, the President's Economic Advisor, the Reserve Bank Governor, officials from the Ministry of Finance, as well as IMF and World Bank officials in the country. Look, low revenue collection, ballooning expenditures, and delays in the full implementation of the Integrated Financial Management and Information System, what's called IFMIS, put at risk Malawi staying on track with the IMF. There have also been delays in reaching agreement on necessary debt restructuring with some of Malawi's international creditors. This has also been further complicated by deals that Malawi is pursuing with some investors that could undermine Malawi's agreements with the IMF and its bilateral creditors. At this point, we are worried that Malawi may not meet the commitments necessary to receive a second tranche of the ECF in the coming months. I have expressed my deep concern in all my interactions with our local government counterparts about how this will impact all Malawians, and particularly Malawi's most vulnerable citizens. This is a critical juncture for Malawi. In order to achieve its macroeconomic stability and advance on the path to meet its 2063 goals, urgent leadership and action are needed at all levels of the government to ensure that Malawi stays on course with the ECF, and that it implements the reforms it has committed to in order to stabilize its economy, to help build the foundations for economic growth and the long-term benefits of all Malawians.
Malawi's headline inflation, the rate at which commodity prices change at a given time in an economy, increased by 0.4 percentage points in July 2024 to 33.7%, the National Statistical Office figures show. It was expected that inflation would remain elevated due to rising food prices, and in its Consumer Price Index issued recently, the NSO shows that food inflation went up during the month under review to 41.9%, while non-food inflation for July stood at 2.4%. From Mzuzu, journalist Feston Malekezo caught up with some traders to gauge impact of the rising inflation on businesses.
Mzuzu City is known for merchandise imported from neighboring countries, Tanzania and Zambia. The city has several markets, with Mataifa being particularly famous for its variety of imported goods. The market is always bustling with activity, with shop attendants frequently greeting customers with karibu, a Swahili word meaning welcome, which is common among Tanzanian traders. However, in recent years, vendors have noticed a slowdown in business. The prices of goods from neighboring markets have been rising sharply, while the Malawian kwacha has struggled to keep pace, largely due to the currency's devaluation in November 2023. One trader at Mataifa Market, Eunice Moya, who sells kitchen utensils, reflects on the past when profits were more substantial.
We are facing a lot of challenges in business starting from last year, even this year, because of the devaluation of our Malawi kwacha. So we experience a lot of challenge in business because the prices are up, but people are failing to buy it because of the prices. They are used to that prices we are selling the past times.
Similarly, Tuonge Milanzi, a clothing vendor, shares how inflation fueled by the kwacha's instability has significantly impacted her business.
We are struggling too much with our money going to Tanzania. Change rate is down, so things are not going on well. Like last time I went to Tanzania, the rate was 1.09. Last week the rate was 1.04. So to tell our customer that we have raised the price, the customer will not buy us. Then we just sell at cheaper price. So we are getting lost each and every day here.
In June this year, the National Statistical Office reported that the non-food inflation rate stood at 22.1%. Recently, the Reserve Bank of Malawi acknowledged that it cannot control inflation alone and emphasized the need for collaborative efforts among stakeholders. The central bank pointed out that economies, including Malawi, are facing multiple external economic shocks, from rising commodity prices to weather-induced challenges leading to a surge in inflation sources. It's no surprise then that the Minister of Trade, Kumwembe, emphasizes the importance of supporting local manufacturers to reduce Malawi's appetite for imports.
We need to capacitate our own even more, a lot more hand-holding to make sure that the environment is conducive, that the local value addition can really happen and the local manufacturers can really grow so that we do more import substitution and we do more exports. And as a ministry, we're looking at various reforms, part of them regulatory reforms, law reforms or legal reforms, just to make sure that the attention, as our Malawi 2063 Pillar 2 says, we industrialize.
While solutions like boosting local production and providing financial support to small businesses are being discussed, the path to recovery remains uncertain. For now, traders like those in Mzuzu are left hoping for a more stable economic environment that will allow their businesses to thrive once again.
Now, in other business news, the Malawi Communication Regulatory Authority (MACRA) has highlighted the need to improve the country's internet penetration, which currently stands at 36%. Speaking during the license renewal ceremony for Telecom Networks Malawi TNM in Blantyre, MACRA Director General Daud Suleiman stressed the rate falls below the regional standard for Central Africa. Suleiman pointed out that enhancing digital connectivity is crucial for Malawi's socio-economic development. We have the whole story in this report.
Suleiman said Malawi's current internet penetration rate is at 36%, which is significantly below the standard for internet penetration in Central Africa. He pointed out that enhancing digital connectivity is crucial for Malawi's socio-economic development.
The internet penetration level in Malawi is very low. At 36%, we remain one of the lowest penetrated countries in the SADC region as well as in the whole world. This simply means that we have a lot of people that are connected to the networks, but they're not accessing the internet. And as you're aware, the world has become digital. Opportunities have become digital, work has become digital, economies have become digital. Therefore, the more we deepen internet penetration, the more we're bringing our people to the new era of doing work, to the new era of accessing government services. So there are a number of reasons why we as a nation are slacking behind. There are issues of high taxation on spectrum fees, high taxation of smart devices as they land in this country, as well as the issue of access to energy. You recall that about 18% of Malawians have access to energy, and that has also a reflection on how many people can connect to the internet. So the 36% is not a good number, but this is a multi-sectoral problem. There are a number of players that need to come together so that we can strive to reach universal digitalization, where every Malawian, regardless of where they are able to access a device that can connect to the internet, not just connect to the internet, but meaningfully connect to the internet.
TNM Chief Executive Officer Michael Helbert expressed pride in the company's achievement and its ongoing commitment to innovation. He said the renewal comes as TNM celebrates nearly 3 decades of making history in Malawi.
Now, first of all, I need to thank the government of Malawi and its regulator, MACRA, for their trust and their confidence and helping us to grow for another 10 years. So their trust and confidence they place in us, basically we can't disappoint them. So we have a lot of wonderful plans for the next 10 years to digitalize Malawi, to bring the internet to more people and internet services and applications to more people as well. But also in the mobile financial services, like we want to bring more financial services to every Malawian. Simply put, for example, there aren't that many banks, bank branches, places where people can go get money, borrow money, or do the banking. We want to bring it ourselves directly to every Malawian, no matter where they are and who they are. So you can see in the next 10 years that we're going to bring a lot of new innovations also in the financial sector for every Malawian. Yeah, 5G is the newest technology, the fastest technology, the best internet that can be used for all kinds of applications. It's not just watching YouTube or TikToks faster, but you can use 5G for any kind of device, any kind of application, whether it be banking, security, even operating companies, mining companies, all that sort of thing. 5G is the very best technology in telecommunications for businesses to run. So you're going to see us invest a lot more in 5G, even in the coming year and over the next 10 years.
How should businesses and Malawians utilize this for the digital economy?
Well, for example, 5G can be used for mining equipment, how to control mining equipment, automate mining equipment. Farming, also 5G is good for farming when you have tractors, irrigation systems, all that, even measuring the soil. All of these sensors and devices and controls need to communicate with central computers, and with each other. And this is what 5G allows us to do. You cannot do that with 3G or even 4G nowadays. So 5G is, again, for the consumer, yes, but especially for the business.
TNM board chairperson Ted Sauti Piri said the renewed licenses grant TNM a further 10 years to provide communication services, including the rollout of innovative solutions to enhance internet access.
For us to be able to operate, we need to have a license to operate. And the government of Malawi has delegated the authority of that license to MACRA. So this license that we've gotten today allows us to operate in Malawi in various spheres for another 10 years, which is a huge milestone. Yeah, look, 36% penetration on digital, to be honest, is perhaps below the average of SADC, as they may have mentioned. And so we need to strive to get better. There's a direct link between mobile connectivity and the digital penetration with the socio-economic factors. So I think we have a shared responsibility to do better than that, and I think that's the point that I was emphasizing. TNM has a role to play, MACRA has a role to play, and so has the government.
Well, with that story, we've also come to the end of today's edition of the program Business Time. It is a magazine program where we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, my name is William Kumwembe. Thank you for watching, but always remember, if it doesn't make money, then it doesn't make sense. Goodbye for now.